All right, hey, what's going on? This is Dan Keller, mortgage advisor at Guild Mortgage. I want to welcome you to another episode of Making Sense of the Markets. Today is October 13th, Friday the 13th, episode number 42. 42 weeks in a row, I've come to you with a market update and some valuable information that you can use in today's market. And today I have some really great information in regards to tax time. Yes, it's October and I'm bringing you tax information now so that you can start kind of preparing for what you might need to gather by the new year. So before I get into that though, I want to give you a real quick market update, and I'm only going to spend about 30 seconds on this. So the last few weeks have been incredibly calm, and that is a good thing. That allows me to actually really help you manage your mortgage and provide pretty solid advice during the home shopping process. So no complaints there. I'll keep you posted if anything changes. But in regards to the market, depending on your credit score, down payment, and type of property purchased, 30-year fixed rates are still in the threes. So it's an incredible time if you were thinking about tapping into some of your equity and maybe paying off some debt, or removing private mortgage insurance, or simply going from a 30-year to a 20 or a 15. Now's the time to maybe take a look at that. So right down below this video or on the screen, you're gonna see my phone number. I want you to call that number into my office. Let's get you set up with a mortgage planning meeting so that I can look at your situation, your goals, and give you some really sound advice, okay? So let's talk about tax time. So when I talk to home buyers about the benefits of home ownership, I spend most of my time talking about three things. One of them are the tax benefits of home ownership. So the IRS allows you to deduct mortgage insurance, property taxes, and some costs associated with your mortgage. So every year by February 15th, your mortgage lender is required to send out a Form 1098, which is a mortgage interest statement. You give that to your CPA or your accountant, and they help you get the deductions that you are allotted. Don't miss this and don't mess this up. I'm going to take a split second to say that it's important that you're working with a professional. Try not to do your taxes on your own. Spend a little bit of money to have a professional look over everything to make sure that you're getting exactly what you deserve and what you need out of your tax filing. The second benefit of home ownership is a forced savings account. So every single month when you make your mortgage payment, you actually pay down your principal balance. Over time, you're going to owe less than what you owed when you took out the mortgage. I call that a forced savings account because over the last 30 years, we've seen positive appreciation. Over the last 10 years, really nice appreciation. So consider that. So that's benefit number two. Benefit number three, we just spoke about, is appreciation. So like I said, over the past 30 years, a constant 3 to 4%. Over the last 10, about a 7-ish%. Over the last 5, almost 10 to 12%, depending on where you live, maybe a little bit more, maybe a little bit less. So it's important to understand those three variables, those three important benefits of attaining a mortgage and owning a home. If you have any questions, let me know. Please share this information with someone that it may help. And like I said, if you want to set up a time to sit down with me and go over your situation, my information's right here on the screen. Call my office. Let's set up a mortgage planning meeting, and I look forward to being a resource, okay? Until next week, have a great week, great weekend. Bye for now.